Good afternoon, everyone. This is Marie Sullivan, and it's 4 o'clock. At this time, I call to order the work session of the Maricopa County Community College District Governing Board for September 15, 2020. Before we proceed with the presentations, for the record, I will do roll call of board members. I will start with board members and move then to Ms. Munoz as a student advisory member. Mr. Hendricks has informed me that he is driving and he will do his best to connect. I'll call his name. Let's see if he's on. Mr. Hendricks. In the event that he comes on at some point, we will then make note of that, Elsa. Mrs. McGrath?
Yes, I'm here.
Good to hear that. Dr. Narini?
I'm here.
Great. Mr. Saar?
I'm here.
Mr. Saar?
Hello, can you hear me?
Now I can. Glad to hear your voice. Dr. Thor?
I'm here.
Miss Nguyen? I'm present, obviously. Miss Munoz?
She's here. She just may need to unmute.
Okay.
Here.
Miss Munoz? You're present?
Yes, I'm here.
Perfect. So great to hear you. Glad you could join us. And for the record, Dr. Gonzalez, I believe you're present as well. So with that, we will move into the presentations. We will hear one from the Human Resources Department, the other from the Finance Department. Dr. Gonzalez, would you like to introduce our presenters?
Yes, President Sullivan, members of the board, thank you for the opportunity to come before you and share on a couple items during this work session. This one is particularly related to the faculty pay formula. I believe Dr. Frank Wilson will provide a presentation. He's being supported by both Dr. Kelly and Dr. Georgetta Kelly, excuse me, and Martha Anderson in the event that there are any questions related to what will be shared. That will be followed by an employee vacation proposal that will be delivered by Ms. Kim Granillo and Ms. Martha Anderson and supported by Dr. George Kelly and Gary Aquinto. So I will have Dr. Wilson take it from there.
Thank you.
All right, I'm going to, President Sullivan, members of the board, Chancellor Gonzalez, members of CEC, colleagues and guests. My name is Frank Wilson. I'm the interim director, district director of human resources. Next slide. And my colleague, Martha Anderson, will be assisting me. Go ahead, Martha.
Thank you, Frank. Dr. Sullivan. This is Martha Anderson, the Associate CHRO with the district. As many of you are aware, we have had some pay issues with residential faculty since 2008. We have every year or every semester created HCM enhancements for faculty for us to ensure faculty are paid correctly, as well as to provide tools for residential faculty to have transparency in their pay. One of those processes that we have put in place is an audit. We did a comprehensive audit of the 1,374 residential faculty members in May of 2020. It revealed the salary errors of 18 faculty, salary errors for 18 faculty. 10 of them had been underpaid, 8 of them had been overpaid. So Dr. Wilson's team undertook the audit, so I will turn it back over to him so he can tell you the findings and how we would like to proceed.
Next slide. So over the last 5 years, we've moved from 1 pay formula to 5 pay formulas for faculty. This was inadvertent, but it happened based on the way we did pay increases. Because of this shift, we have manual actions that are needed to calculate faculty pay. And with those manual actions, we've observed errors have been made. The complexity of the residential faculty system with its 5 formulas prevents us from using the internal controls that are built into the HCM system, which would help us further minimize pay errors. Next slide. So to address this challenge, we're going to return to a single formula for residential faculty salaries to be implemented this year. This will minimize the impact of the pending overpayments. It will allow the salaries to be automatically calculated within HCM, which will significantly decrease manual data entry. It will align our practices with the residential faculty policies. Right now, our residential faculty are paid, only about 5% are paid based on what's published in the RFP. Everyone else is paid based on formulas that are outside the RFP. And finally, it'll simplify use of the pay scale for faculty members. The good news is the cost of these adjustments can be covered within the current allocated budget. So there is no new money requested to fund this. Next slide. Are there any questions?
Members, do you have questions of the presenters?
Ms. Sullivan?
Yes, Dr. Thor.
I'm not really clear about what we were just told. By now calculating faculty salaries based on the RFP, is that changing the salaries of any of the faculty members?
So President Sullivan, Dr. Thor, yes, there will be salary adjustments for faculty members ranging from $0 to more than that overall. So the adjustments for 79% of the faculty will be less than $100 to move everyone onto a single formula. Right now, we've got 5 separate formulas that are being used to calculate faculty pay, which has resulted in multiple errors as people apply the wrong formula to a faculty person.
And will any faculty members lose money as a result of this change?
No faculty member will lose money as a result of this change. It will return us to a single formula, which is what we used to have up through 2015-16, a single formula to calculate faculty pay based on step and grade. So it'll return us to that state and get us all back on a single formula for faculty.
Okay, thank you very much.
Are there any other questions, board members?
Yes, Ms. Sullivan, I would like to ask a question. Jean McGrath here.
Certainly.
Why are there increases in the pay by switching systems?
Sure. So the increases are due to moving everyone back onto a single formula. So what it will do for those faculty who were hired most recently from 2019 and 2020, it will pay them the same as other faculty at that same level of step and grade. So it's bringing an alignment between all the different formulas to a single formula and paying people comparably based on their step and grade. Right now, we don't do that in terms of with the 5 formulas. So it's bringing order to the system right now where we have some disorder.
It doesn't sound to me like it's disorder to have people who were hired in at a certain pay scale and other people that perhaps were hired in at a different pay scale. And then all of a sudden you say, everybody's got to be equal. It sounds kind of like socialism to me. I don't care for this at all.
This is Marie Sullivan. Dr. Wilson, how does this movement to a single formula stabilize the issues of errors that occurred prior to?
So President Sullivan, the errors that we observed were things such as transposing 2 digits when you enter them into the system. Also using the wrong formula to enter in a salary into the system. By moving to a single formula, we can use the built-in functionality into HCM to automatically calculate the salary based on step and grade. So what the HR personnel will put in is the step and the grade of the faculty member, and the salary will auto-calculate instead of needing to be manually entered, as is the current case. This will help prevent salary errors. In terms of having everyone be paid the same, the system within Maricopa has been faculty are paid different amounts based on the step and the grade. The individuals with the same step and the same grade historically have been paid the same. And right now we're in a state where that's not the case. And so we'd return to the state with individuals of the same step and the same grade would be paid the same.
And President Sullivan, this is Martha Anderson again, if I could add one as well.
Yes.
The salary scale within the RFP does not match what faculty are being paid. So this would also bring into alignment the RFP scale. We would adjust the scale, and then we would be in alignment with the RFP document as we updated the scale.
Mrs. McGrath, do you have more questions around your question? Did I lose Mrs. McGrath? Oh, okay. Jean, you're still on mute, so I'm going to presume you don't have a question. Oh, there you are. Go ahead. Do you have another question or
Yes.
follow-up to your comments?
When they come in with a proposal to give pay increases to a great number of people, I think that they should come in with the dollar amount that we're going to be spending on this. And I think we expect that to see that when this is presented at the general board meeting. And I really, I think if we have people that make multiple mistakes in the payroll department, maybe we should get better people rather than giving everyone an automatic raise. Thank you.
Thank you. I do have a couple questions, but before I ask my board members, do you have other questions or comments? I know you're on mute, so does anyone want to unmute and ask a question before I ask mine? Okay, being none, I'll move forward. So each time we make a shift in how we do this, what is the cost to the system overall?
So President Sullivan, I'm going to restate the question to make sure I understood. So are you asking what is the cost to make this adjustment to move back to a single formula? Is that the question?
I assume there's costs for going one way, then you go another way, and then you go, that transition. So what is the transition cost? Not applicable to the salaries, but the systems cost.
Okay, so I'll restate. So I believe your question is, what is the cost to turn on within HCM the feature that allows the salaries to be calculated? Is that automatically calculated?
Yeah.
Is that the
and
question?
The transition, yes, and the transition from manual to automated, just, yes.
President Sullivan, this is Martha Anderson. In the HCM system, this is a delivered functionality to be able to load in the salary scale so that an HR person, when they're putting a new residential faculty member into the system, would be able to just type the step and grade. The challenge that we have now is that we have faculty members who are off step and grade. So there is no way to turn on that functionality to allow it to be able to ensure correct pay, that there isn't, as Dr. Wilson indicated, there isn't some transposition of numbers, there isn't some rounding error done by the person that's entering it. The information would be put in the system, validated in the system, and then as they are placed on the salary scale at a step and grade, that number would be typed into the system and the salary would automatically populate into the employee's record. We also, this past year, created a compensation change tool so that as we go forward as an organization, if there are additional increases granted by the board, then we would be able to put those in the system again in an automated fashion instead of a manual fashion.
Okay. So then my follow-up to that is, do we have to keep adding formulas each year if we adopt one system or if one system isn't put in place?
We would not have to. One of the reasons that we have multiple systems at this time is because historically we had increased the salary scale by the percentage increase by the board. The decision was made last year not to do that. So that did cause the problem of people being off step and grade. So that is one of the several ways in which we have moved off a single formula.
Okay.
So President Sullivan, this actually, what we're trying to get back to is what worked for many, many years up through 15, 16, where we had a single formula for faculty based on step and grade. And that's the state we're seeking to return to due to all the problems caused by the 5 separate formulas which we're currently using.
Got it. And then if the RFP is revisited and redone, then that will apparently affect the salary schedule, but will that affect the process?
So President Sullivan, the updated salary schedule will include the same top of scale that's currently being paid to faculty. So that the top of scale is not changing, so it'll be exactly the same. It's just that the numbers assigned to each step and grade will shift to get everyone back onto a single formula from 5 formulas. So the document within the RFP will look very, very similar to what the current document in the RFP is. It will just have the updated numbers in the table. But again, the top of the scale is not changing.
No, I understand that. I just was saying if, for example, something is, if the RFP and the dynamics and the issues in the RFP change that impact salary schedules or how salaries are determined, obviously then that would require another salary systems change.
Yes, ma'am.
If one changes, then the other will change.
Yes, President Sullivan, if policy changes related to salaries, then that RFP would have to be updated to reflect those policy changes.
Right, and then that might reflect how this system works to accommodate those.
Yes, if there was a change, I'm sorry, President Sullivan, yes, if there was a change in the way the scale is set, we would have to make a configuration change within the system.
Okay, all right, well, thank you very much for answering my questions. Anyone else? If not, then we'll move on to the next presentation. I'd like the record to note that Ms. Nguyen has joined us.
I've been on since 4:09. Yes.
Perfect. Thank you. Dr. Gonzalez, to the next presentation.
Yes, President Sullivan, members of the board, you're going to hear from Martha Anderson again and also Kim Granillo as they talk about a vacation policy amendment proposal.
President Sullivan, members of the board, Chancellor Gonzalez, members of the CDC, colleagues and guests. My name is Martha Anderson. I'm the Associate Chief HR Officer here within the district. So we bring before you today a presentation regarding a COVID-19 policy amendment related to vacation leave flexibility. Next slide, please. Why do we need these options within the district? We continue to encourage our employees to step away during this pandemic, but operational needs require them to be in place to meet the needs of our students and move forward. Also, there's a flexible option is being provided to support the staff during this unprecedented time. Next slide. Sorry. The impact of COVID-19 has put many employees in a use or lose status as it relates to their vacation time. Heightened and innovative work due to the pandemic, requiring establishing a process and procedures to support the extended spring semester, establishing the processes and procedures to support the fall semester, new programs developed for students, credit options for spring 2020 classes, task options, tuition discounts, CARES Act's direct payments to students, Maricopa Opportunity Grants, and the development and maintenance of the equipment so that the employees could continue the work of the district during the pandemic. Next slide, please. COVID-19 vacation leave flexibilities that we would like to bring forward at this time is a vacation buyback program and an extended vacation carryover program. Employees would be able to choose to participate in both of these programs. However, they would only be able to have a combined limit of 160 hours. I would like to bring forward my colleague, Kim Granillo, so that she can continue with the presentation.
Thank you so much, Martha. President Sullivan, members of the board, Chancellor Gonzalez, members of CEC, colleagues and guests. I am Kim Granillo, and I am the Associate CFO and Controller for the district. And now that Martha has shared the why of what we're proposing, I will talk more specifically about the what. And specifically about the vacation buyback piece of the flexibility options we're proposing. First of all, I want to stress that it is a one-time option or one-time activity due to the pandemic. This is not something that Maricopa has offered previously in its history that I am aware of, and I've been with the system for about 23, 24 years now, so nothing that I recall us doing previously. The specifics of the program are that employees who earn vacation and have more than 80 hours in current vacation after we do this would be allowed and could choose to sell back to Maricopa up to 160 hours of their current vacation. I want to share specifically about that any payment for these hours does not represent a base salary increase for the employee, does not boost any retirement wages for Arizona State Retirement System. Some of you may be aware of other retirement systems, especially in the state of Arizona, that offer options to employees or participants to do certain activities that allow them to increase the amount that they actually will recover through their benefits. First of all, ASRS doesn't allow for that, and this absolutely does not support that in any way. I also want to share that these dollars, the dollar value of these hours would have already been expensed by Maricopa, and we'll talk about that on the next slide in just a minute. I do want to specify that any payout would be additional wages to the employee on their W-2, and along with that, they would be taxable wages to the employee too. So also, if I can get the next slide, please. To delve a little bit more into the hours expensed, or that these dollars have already been expensed, I think there's been a question kind of out in the land as to whether or not there's a cost for this. There isn't any additional cost, and that is because as of the end of each fiscal year, so in this case specifically at June 30th, Maricopa is required to record an expense for any obligation. And because employees have already earned these hours over the year in which they worked, we are required to record an obligation for that. And the calculation is simply the hourly rate times the number of hours that are still outstanding for that employee. Because of the fact that we're requiring an 80-hour reserve in their leave balance, for instance, most of our employees will not have earned another 80 hours since July 1st. So any hours over and above the 80 would have already been expensed as part of our 2020 expenses for the year. Also, if I can get the next slide, please. The other part, moving on to the other item, providing flexibility for our employees, is to potentially then allow for additional carryover. At the current time, as of December 31st, employees are allowed to carry over 1 year's worth of allocation. And what we are suggesting as part of this proposal is to allow employees who are either not able to sell back time or choose not to sell back time, they would be able to carry over additional hours into spring of 2021. The specifics about this is that the time must be taken by June 30th of 2021, and then any remaining time after June 30th would be forfeited. Employees would not need to request carryover. It would happen automatically. Within our policy today, employees are allowed to request an exception. What this would essentially do is to do away with the exception, and the hours would be carried over. And then just as a reminder, what we are also, or part of this proposal, is that the carryover time and any bought back time would be a total of 160 hours in whatever combination, if you will, works best for the employee is what our recommendation is. And then if I can go to the next slide, Elsa. So I'm sure everybody's curious as to the numbers and how all of this works out. So for the vacation buyback piece, of the employees that have a vacation balance, so just to clarify, this does not include faculty or part-time hourly employees, as they do not accrue vacation by policy. We have 3,101 employees that currently have a vacation balance, and I will also share that we have used data as of September 4th in order to present this. So if employees have used time since then, that wouldn't be accounted for in this data. So to move forward with the vacation piece or the buyback piece, 55.4%, or 1,718 employees would be eligible to sell back up to 160 vacation hours. And of course, again, leaving a balance of at least 80 hours. The range of eligible hours ranges from 0.07 to up to 160 hours. The total number of hours above the required 80 for all of these individuals is 127,000 hours with a dollar value of approximately $4.5 million. And again, remember that is simply the number of hours times the hourly rate for each employee. And to put some context around those very large numbers, the average hours per employee is approximately 74.2 hours. So very clearly, we have people who have a little bit of time that they could sell back, and people who have a lot of time that they could sell back. I also want to share that employees that are eligible to sell back hours, meaning they have more than 80 hours, run the gamut as to the type of work that is done. We have custodians, we have admin assistants, we have administrators, we have student services professionals that all fall within the ability to be able to sell back those hours. So it definitely covers a wide range of Maricopa's employees. I also want to share an example. If we got an employee that makes $50,000 a year, that is about $1,923 per pay period. If that employee were to sell back the average figure of 74.2 hours, they would receive an extra $1,700 in their paycheck. So, and that is before taxes, because again, all of these payouts are subject to taxes. And, you know, it seems as though that could really make a difference to that employee. At the same time, if they were able to and did choose to sell back the max allot of 160 hours, that would be an additional pay of $3,800, again, before taxes. So again, just trying to provide some context to some potentially odd-looking numbers. So Elsa, next slide, please. Then the other piece of the option, or the vacation carry forward, again, looking at the numbers, without selling back any vacation time. So in order to come up with data, we kind of had to look at them independently, because we're not sure by human nature what people would choose to do with their options or their flexibility. Without selling back any vacation time, 683 of the 3,100 employees may be at risk for losing vacation as of 12/31 of 2020. The range of loss ranges from anywhere between half an hour to 160 hours. The total number of hours is just over 50,000 with a dollar value of just under 1.8 million. The average hours per employee are 73.3 hours, again, fairly consistent with those that are eligible to sell back time. And these hours may be carried over to 2021, but as I stated earlier, it must be used by June 30th of 2021. And next slide, please, Elsa. So to summarize, we're trying to, or the attempt here is to offer our employees the opportunity to buy back a limited number of unused vacation hours, really as an intention to support our employees at a time when it has been difficult in many cases to be able to step away from work with all of the changing conditions that we've had and the new activities we've had to do, as Martha so eloquently described at the beginning. And again, just to reiterate that this flexible option for employees comes at no cost to Maricopa or no additional cost to Maricopa. And Martha and I are happy to take any questions, I think is the next slide. Thank you, Elsa.
Thank you, Martha, and thank you, Kim. Board members, do you have questions on this? And I will open it up, and if it gets complicated, I'll call roll on this. So first of all, any questions?
Yes.
I have one.
All right, so Mrs. McGrath and then Ms. Nguyen.
What's the normal vacation hour time? How, it sounds like people are taking a month and a half to 2 months or get that much vacation time.
President Sullivan and Mrs. McGrath, the typical employees, and so there are a couple of different areas where the leave accruals can be different, but the majority of our employees earn about 160 hours a year, so 4 weeks of vacation.
Thank you.
Ms. Nguyen?
The 31, and I didn't get the exact number, but just call it 3,100 employees. Did they know that this is a possibility to do this way, that this is under consideration? And if this did get approved, what would be the way that we would communicate with them so that we can have a group of employees on December 31st of this year not having exercises? So if this did get approved, how would you then communicate with those that are eligible for it? What would be the vehicle so that we could ensure that they were aware?
So President Sullivan, Mrs. Nguyen, we have a communication strategy in place should this be approved. We have a standard communication strategy that we have put in place in HR to have communications. We would be working with the business services team, and we would communicate out through multiple venues, through the interim Senate, through normal communication, through the different college HRs, through the different councils, so that everyone who was eligible and wanted to take advantage of it would have the ability to do that.
It only affects 30, well, we have what, 10,000 employees? Approximately, is that accurate?
Yes. Yes.
And so if you do it on all those channels, I was hoping, I'm glad to hear that you've got all those communication channels, but I was hoping that this would be more personal to the people, like some kind of, if I'm employee A and I have 30 hours, that you would let me know as employee A, you have 30 hours that these are your options, as opposed to letting everyone know, because then I think that could actually create more confusion if you're not part of this group. So is there a more personal way that we can communicate directly with someone who is eligible? Because then if you're not eligible and you hear about this other thing, I think that could create more confusion and issues.
President Sullivan, Mrs. Nguyen, I'm sorry, I wasn't clear with my communication. The policy groups or the groups that we spoke about were on the broad scope of what's available to employees. All of those groups are classified, or I'm sorry, full-time staff. We would send communication out to individuals. There is a current use or lose tool that employees now can utilize as we approach the end of the year to determine where they sit. So we do have a tool in place already where employees can see where they are at any given time within the fiscal year as it relates to vacation. So we would do a targeted approach so that individuals, if they had questions, they would be able to calculate what they were eligible for and be able to make an informed decision.
So appreciate that answer. Thank you for your time.
Board members, are there any other questions?
Ms. Sullivan, this is Dana.
Yes, please go ahead, Dana.
Just quickly, the cost of this, is it coming out of our CARES funding?
President Sullivan, Mr. Saar, it is not, because it is not an additional expense to the system. We have already booked this expense as part of our normal year-end activities in fiscal 20.
Thank you.
You're welcome.
Any other questions? Did anyone speak up before I asked mine? Early at the beginning of the presentation, there was comment made that this was one time only. Do you think if it is a successful strategy for our staff that it could become part of the culture of the system? Because it's not unusual for companies to have vacation buyback policies and practices. And I understand and appreciate that you haven't done it before. This time we're doing it with the impetus of the reaction and the extraordinary work efforts of so many of our employees to accommodate the current environment. But what would be your expectation around that? Would there be a survey done perhaps at the end to determine people's attitudes about this, or what does the research say that once you implement something like this, even in as an unusual circumstance, that it becomes again part of the culture? Do you have any point of view on that?
President Sullivan, there are, as you indicated, many organizations that have the vacation buyback every year. This is one of the areas we could survey employees regarding. We could bring recommendations and research back to the board to get feedback to determine if this is a direction that the board would want to move for a policy for the district as a whole on the go forward.
Thank you. As I said, it's just a curiosity because large corporations do use this sort of practice. And given that it's not a cost since we carry liability or obligation anyway, I was just curious. So thank you for answering my question, and we can certainly talk about that later. Are there any other comments? Did someone speak up? It's hard for me to hear that. Any other comments, board members? I hear silence, so I'm going to assume that there's no further comment on this session. Thank you very much for your presentation today. It's important information for us to have as we move on to the next step. Thank you very much. Okay, and with that, then we conclude the work sessions. Dr. Gonzalez, before I do close out the work session, do you have any other comments?
No, that concludes our presentations. We thank you for your good questions and your participation and hearing us out and providing some additional feedback. All will be taken under consideration. So thank you.
You're welcome. Okay, so I'm going to wait 1 minute in case other folks are leaving and others are coming on before we move into our agenda review. So literally it's 4:38 and I'll reconvene us in a minute. I don't know if there's any transitions, but we'll give it a shot for a moment.
This is Leslie Cooper, General Counsel. Is the review scheduled for 5 p.m.?
Oh, actually mine says.
I think only the executive session is scheduled for immediately following. I'm sorry.
Thank you for noticing that. Is it? How's that help? I'm looking for my agenda. Oh, here we go. It does say agenda review at 5 p.m. Thank you. All right, so I guess we'll all put ourselves on hold or mute or whatever and reconvene at 5 p.m. Thank you, Ms. Cooper, for that reminder.
Thank you, Mrs. Sullivan.